Picture this for a second. You're standing at a high-stakes auction, and right in front of you is this absolutely beautiful, pristine, vintage car. The auctioneer is talking a mile a minute, you've got the paddle in your hand, the excitement in the room is just palpable. But there's a pretty massive catch. You have absolutely no idea how much money is actually in your bank account. Would you start bidding? Well, no, of course not. That would be completely absurd, right? But believe it or not, hunting for a house without knowing your exact verified budget is literally just like bidding blind at that auction. So, welcome to this explainer. Buying your first home is incredibly thrilling. I mean, it's probably going to be one of the biggest financial decisions you'll ever make. But before you start hitting up open houses and picking out paint colors, you need to get your hands on what we call the golden ticket of the real estate world: mortgage pre-approval. I am absolutely passionate about this topic because this one single step is what takes you from being just a casual window shopper to a serious, heavy-hitting contender in the housing market. Okay, let's dive right into our roadmap for today. We're covering 5 key areas. Number 1, your secret buying weapon. Number 2, pre-qualification versus pre-approval. Number 3, solving the lender's puzzle. Number 4, the pre-approval timeline. And finally, number 5, financial mistakes to avoid. Section 1, your secret buying weapon. So what is a mortgage pre-approval? Well, it's a formal document from a lender stating that they are conditionally willing to lend you a specific amount of money to buy a house. Think of it as a formal thumbs up from the bank. And the absolute most important phrase here is verified financial data. They aren't just guessing, they are taking a deep dive into your income, your actual debts, and your credit history to figure out exactly how much they trust you to pay them back. Now, it's not the absolute final loan offer, but it is the closest thing you can possibly get before you actually lock in the house of your dreams. Doing all that extra paperwork matters immensely for a few big reasons. First off, it defines your actual buying power. This prevents the absolute heartbreak of falling in love with a $500,000 home only to find out the bank is only going to lend you $400,000. Second, it shows sellers you mean business. If a seller is looking at 2 identical offers, but only one buyer has a pre-approval letter, they're almost always going to go with a pre-approved buyer because that financing is already lined up. And third, because the lender has already done the heavy lifting of checking your background, it significantly speeds up the whole closing process once your offer is accepted.
Section 2, pre-qualification versus pre-approval.
This is where a lot of people get tripped up. Think of pre-qualification as a quick, informal chat. You tell a lender what you make and what you owe, and they give you a ballpark estimate with no hard credit check. But, and this is a massive but, it's based entirely on what you tell them, not what they actually verify. Pre-approval, on the other hand, is the real deal. The lender actually verifies your documents, runs a hard credit check, and gives you an exact dollar amount. Because pre-approval relies on hard proof, sellers and real estate agents take it vastly more seriously than a simple pre-qualification. Section 3, solving the lender's puzzle. Getting pre-approved means you essentially have to gather your entire financial life into a folder. You're going to need proof of identity, like a passport or driver's license. You need proof of income. That usually means your last 30 days of pay stubs and the last 2 years of W-2s. For assets, they're going to want 2 to 3 months of bank statements. They'll also want to see any investment accounts like 401ks. And finally, they need all the details on your current debts: car loans, student loans, credit card balances, the whole shebang. Honestly, I highly recommend gathering these items as early as possible. Having them ready just makes the entire process incredibly smooth. Now, when a lender looks at all those documents, they're evaluating 4 main pillars to solve their puzzle. First is your credit score, which is just a measure of how well you've handled debt in the past. Second is income stability. They really love seeing that you've been working in the same industry for at least 2 years. Third is assets. They need to know you actually have the cash on hand for a down payment plus some rainy day funds. And fourth is your debt to income ratio, or DTI. So, debt to income is exactly what it sounds like. It's how much you owe versus how much you make. Lenders want to see that your total monthly debt, and that includes your estimated new mortgage payment, takes up no more than 36% of your pre-tax income. To put that into perspective, let's say you make $10,000 a month before taxes. Your total monthly debts need to stay under $3,600. The rest of that money is yours for living expenses, taxes, and savings. Keeping that debt slice at 36% or smaller, that is the secret to passing the test. Section 4, the pre-approval timeline. Here's the thing, pre-approvals do not last forever. In fact, most of them are only valid for about 60 to 90 days. Why? Well, because financial situations are incredibly fluid. Over a couple of months, you might change jobs, get a raise, take out a new car loan, or, spend a chunk of your savings. Lenders just need to ensure the financial snapshot they approved is still totally accurate when you finally make an offer on a house. But listen to me carefully here. If your letter expires before you find the right home, do not panic. Seriously, this happens all the time in real estate. Usually, all you need to do is provide your lender with your most recent pay stubs and your latest bank statements to get that letter renewed. You absolutely don't have to start the whole massive process over from scratch. Section 5. Financial mistakes to avoid. Okay, once you have that pre-approval letter in your hand, you have to put your finances on autopilot. Number 1, do not go buy a new car, and definitely don't finance a house full of expensive new furniture. Your new home might look a bit empty for a month, but hey, at least you'll actually own it. Taking on new debt completely ruins that debt-to-income ratio we just talked about. Number 2, don't change jobs if you can help it. Lenders really hate sudden career changes because it ruins your stability profile. And number 3, do not miss a single bill payment. One late credit card payment can ding your credit score enough to trigger a last-minute loan denial. So the absolute most crucial point you need to remember is this. Pre-approval is conditional. It is not a final, guaranteed loan. Until you are actually sitting at the closing table, signing the final papers with the shiny new keys in your hand, your financing is fragile. It absolutely depends on your financial profile staying exactly the same as the day they approved you. So no sudden moves. Let's round this out with some powerful pro tips to ensure your success. First, go check your own credit at annualcreditreport.com before you ever talk to a lender. That way you can fix any weird errors in advance. Second, shop around. Don't just take the very first offer. Comparing rates from just 3 different lenders can literally save you thousands of dollars in interest over the life of your loan. And lastly, stay within your budget. Just because a bank says you can borrow $500,000 doesn't mean you actually should. Make sure you're truly comfortable with the monthly payment after factoring in real-world costs like utilities, maintenance, and repairs. I really love this quote, and I think it perfectly sums up everything we've talked about today. Mortgage pre-approval is the foundation of a successful home purchase. It gives you the confidence to shop and the power to win the home you want. Yes, gathering all those W-2s and bank statements feels like a ton of tedious paperwork, but that paperwork is exactly what empowers you in a competitive housing market. So I want to leave you with this question. Are you ready to forge your golden ticket and take control of your homeownership journey today? Understanding this process really does put you miles ahead of the competition. If you found this explainer helpful, definitely keep learning. There is just so much more out there about first-time homebuyer programs that can help you even further. Be confident, be prepared, and happy house hunting.